The crypto world has been turned upside down in the last few days, and Binance, the heavyweight champion of crypto exchanges, has taken some serious punches. Not only have they raised their fees, but they're also dealing with software issues and are now getting slapped with a lawsuit from regulators. Ouch! And if that wasn't bad enough, traders are draining billions of dollars from the exchange like a leaky faucet. In this video, we'll break down all the craziness going on at Binance. You'll be a Binance expert with all the insider knowledge you need to stay ahead in the crypto game. The Commodity Futures Trading Commission filed a lawsuit against Binance, alleging that they operated illegally in the United States and violated regulations to prevent financial crimes. But that's not all. Binance announced they'd be resuming their fees for spot Bitcoin trading after making them free for a while. And to top it all off, they also had a temporary hiccup where they had to suspend spot trading for a few hours to fix a software error. Nansen, a crypto data provider, reported that Binance had experienced a net outflow of $2.1 billion on the Ethereum blockchain over the past 7 days. Despite all the drama, Binance still holds a whopping $63.2 billion in their publicly disclosed wallets, according to Nansen data. Andrew Truman, an analyst at Nansen, mentioned that the pace of withdrawals had been higher than usual and picked up even more after the CFTC lawsuit was announced. We'll be keeping an eye on the story, so stay tuned for more updates from us. Binance's spot market share dropped from 57% at the beginning of March to a low of 30% on March 24th. It turns out that a lot of trading volume on Binance was actually zero fee until the fees were reinstated, as noted by Kaiko, a digital assets data provider. Fees are extremely important, says John Cornstorm, portfolio manager at crypto hedge fund Iceberg Capital. Generally, I'll make a decision to trade on an exchange first and foremost on its custodial aspect. The second is the fees for sure. While Binance has seen bigger outflows in the past due to regulatory issues, Andrew Truman from Nansen mentioned that February was particularly bad after New York regulators banned the issuance of Binance-branded stablecoin BUSD. At its peak, Binance saw over $1 billion in outflows per day. It's been a tough year for BUSD, which has seen its market value decrease by more than half. Binance's derivatives market share remains at 66% according to Crypto Compare, but its American affiliate Binance.US is facing legal troubles after a judge blocked its attempt to buy out Voyager Digital's customer accounts. Ouch! And it seems more regulatory issues are on the horizon for Binance, as investors and analysts keep an eye out for further action in the US and beyond. CFTC Chairman Rostin Behnam accused the exchange of an ongoing fraud, innovating registration requirements and intentionally letting Americans use its offshore crypto exchange. Is Binance trying to outsmart the CFTC or just trying to be a maverick? Either way, it looks like they got caught up with a hand in the cookie jar. Despite the challenges, Binance has been making efforts to operate legally in the US, including setting up an affiliate, Binance.US, that offers a slimmed-down menu of crypto products for American users. With all the uncertainty surrounding Binance, investors are taking caution and some are reducing their exposure to the exchange. Can't blame them. Nobody wants to take on that kind of risk again after last year's bank runs. Maybe it's time for Binance to clean up its act, or it might find itself losing more than just market share.